Good morning, everybody. So this update here on Wednesday, the 12th of October 2022. I wanted to share again this chart. I shared it long time ago. I think you remember this one where we had the top. I posted it and we have been topping there for some time now. So what I wanted to share, it's of course, as you see, it's the yields, 10 years yields or bonds, it's the same thing at the end. They are just inverted. So it's the correlation we have seen between the EURUSD in orange here, you see the EURUSD, and the bonds or yields market in USA. So it's not always the case. Sometimes they are totally correlated. You see here it goes up, but it started to disconnect, and now they are totally disconnected. So I'm looking at it because I think this could be the top. And this could be the bottom. I mean, when the yields would top, we could have a bottom or at least a turn here. Something will happen. So that's why I posted that several times. So it's important to keep an eye on this. I spoke about it since I think middle of September. We had this big area there. You see, we double top that on the yields. And now the EURUSD is still in this area. It didn't post new lows, of course. The lows of September are still in place, and we need to keep an eye on this one to see what's going to happen. So we saw yesterday. It's interesting because if we zoom in a little bit, I will take off this thing. If we zoom in a little bit, you would see it's really correlated. Yesterday we had a move down here, and that's when EURUSD went up, gold went up, and we took a very nice, we had a very nice session yesterday being long EURUSD and long gold. So, and then it bounced suddenly, and that was because of, I think it was Mayer speaking that said, Fed will do what it has to do, the same rhetoric we have heard for a long time. I posted on Twitter in several occasions some big economical guru comments about the recession coming, of course, in some country of Europe, like Germany and Italy, perhaps France in some quarters, but coming too, and probably much harder. That's not only me saying that. I've been saying that for a long time, but now it's not only me, it's even those people who are much more performant than I am in economical things, but they all say the same thing, which is the recession in US could be much stronger and much longer than many are expected. And Fed made two mistakes when they hiked. The first one was to say that the inflation was temporary. That's clear. It's not temporary. Even the ECB did the same mistake. And the second one is they have hiked way too fast, according to me since a long time, but according to those people. So it's very interesting to see what is written now. And we have a fight. So what I wanted to point out here is we must not get wrong-footed because we see a bounce like this or whatever on a speech like Mayer's yesterday. We will have that for a long time still. On each time a speaker will come in the market, it will push up or push down the DXY. This is yesterday move, and this is the push we had. We posted new highs here in this session. It's interesting too to note that we have there a nice divergent, unless I'm wrong. Let me show it to you here. So if we look at that on a 1 hour, you see we have a very nice divergence here, there, compared to there. So it's very clear. And that's a very aggressively positive divergence. So it's something we need to keep in mind. I speak about those divergences as much as I can. I teach them, and I teach a lot of things in the mentoring, but that's something I'm using a lot, and even on the gold, I use it because I discover something on gold with other tools. So this is what we have on DXY. We stop on the 61.8. It's a very important fib. You see, we barely touch the 76.40 there, but we stop on the 61.8, mostly double topped on it, and now we are pulling back, which could be because, which could be an acceleration, which could see an acceleration. We saw that yesterday that this acceleration was starting. The mayor's speech stopped it. People are buying the USD, thinking it's going up forever, which is not the case. And now we are seeing the, I would say, the natural trend coming back. We are still on the high. I said that could be the high of the year, and even for a long time, even if we go a little bit higher, this area will stay, in my opinion, the highs for some times. So that's the scenario one, is we stay here. The scenario two is we go to 121 with Euro USD going to 0.90, but I already explained that in many occasions, so that's not necessary to speak again about this. The other interesting thing here with DXY, you remember we called this channel, I think it was even in July or something like that, or August. So we topped on this channel exactly like Euro USD did in a way, and we pull back from it. The target here is there for the first big stop or big bounce we would see would be in this area, which would send the Euro USD much higher than it is now. Now, let's look at the Euro USD. We have had, let me make sure first that I'm sharing the right screen. Yes. Okay, so we have had this, we have seen this ABC down for a long time. We are looking at it very carefully. We have the 61.8, that was the bottom 2016, and then we bounced from it, went to the 50% here. I say that already many times, but I repeat for the new listeners. So we went back to the 61.8, broke through the 76.40, 78.6. So as I said on the quarterly close, we have closed above the 78.6, but under the 76.40. Which is calling the 100% extension. Technically speaking, when we look only at this thing, we should look for the 0.90 on Euro USD. I am long, and I will stay long all the time, because it's very possible that we do not get there, and we bounce from there for several reasons that I explained, which is the big channel we saw on the DXY and on the Euro USD, the situation of the yield, the fact that the US economy is going to face some serious problem. So if those problems do not happen soon enough, we will go lower. If we keep on seeing new information about those problems, and if ECB is going to hike harder, which is what we expect that will happen, we will stop there, and then we will have a phase break under this one on a yearly base. Like it was here, we could very well close the year above this level and probably higher. So we have to be very careful on what can happen here. So that's why it's a little bit tricky, because we had some contrarian information coming from this technical view, and the exhaustion indicator from the volume point of view, from the price action point of view, all those dynamic indicators I'm using are showing an upside big fuel tank. So that's why I stay long despite this potential move to 0.90. So that could happen on something big. I don't know, something happening, for example, in the war, which would create a big move, and we would suddenly go down 400 pips and then bounce from it. Anything is possible. But now I keep on being long, because anyway, the upside here is much higher. The upside potential is much higher than the downside potential. And we could post a phase break under the 61.8 on the yearly base. So that's what we have now. If we look a little bit inside now, in this on this ABC, I posted this chart last week, if I remember well. Yes, it was last week. I posted this chart calling from this area to be a support, and that's exactly what's happened. Yesterday, you see, we went to the next level we have there, and that's where Meyer started to speak. So instead of seeing just a small pullback and the continuation on the upside, as well as gold that we will see after, then we had this bigger pullback, and we came back on the same area, which is there. And now we are still bouncing from it. As you know, we are long from in this morning. I'm long, I think here 0.96 something. I posted it on the Twitter feed. So I'm long gold and EURUSD whenever I can. So we will speak about gold soon. We have a lot of support and resistances on the upside. I post them in Twitter, but that is the overall view I have for now on the Euro USD. So now let's look at gold. So gold is very simple. I explained that yesterday on my Twitter feed, but that's what I'm looking for now. I'm looking for this this trade at the end. Let me unblock this thing. So this is, if it wants to move. Okay, well, it doesn't want anyway. So this is the, okay. Okay, so this is mostly the trade I'm looking at. All this area is an area of buying here for me. And the target is basically here, the 20 at 27.14, let's say 2,715 area. And for that, we need to break this 2,700. Yes, we need to break the 2077, which is the high of 2020, to be able to go up to this level and then break and go and see the 27,1500 high on gold. So that's what I'm calling. Of course, it's a very nice ratio with a 66% upside move and a wonderful risk-reward ratio of 6-to-1. So, of course, I'm not holding the shorts here. That's very clear. I never hold red position because with the instrument I use, I can see when the price is going lower and when I can buy back the bounce. And then we have seen what happened in the last days. So it's very, let me take off this thing now. So it's very interesting because we bounce on the monthly open, we bounce back, we pull back from this level here. So now we didn't touch this one, and that's probably, we stay, you've seen the same area of this previous consolidation there. We're on the daily, let's put it on the 1 hour chart, and that could start to look like a small head and shoulder, inverted head and shoulder, whatever some people call that. So we don't, I don't look at that very often. It's just something, it's basically when people call that a head and shoulder or something like this, it's very simple. There is a consolidation, then there is a flush of this consolidation, then price come back to reconsolidate in the same area of the previous consolidation, and then we can see a start from there. So I much prefer to look at this that way than head and shoulder or a flying butterfly or a red cloud or whatever they call it with a funny name. So it's just a basic price action thing that make, of course, these kind of figures. So that's where we are now on gold. We bounce from the monthly support there, the monthly open there. The daily is down today, so we are on the upside move. Same thing, and very, very important level here that I had called in 2020. Since 2020, we have been waiting for this level, and then I bought gold here, here, and there again, bought it here again. We saw a bounce, then we broke through it. which could post it's exactly the same thing as the EURUSD and the DXY. If DXY goes to 121, then we will see the 1,440 level here. And we will buy it on each of those levels when we have a setup, because it can stop anyway before that area. So there is a strong potential on the upside there. You saw it's nearly a 70% trade on the upside. And we are looking at those levels with a lot of attention. You see how well they have been playing. So we are looking at those levels with a lot of attention for the next upside move. When we would break this 1,685 area, we would break up, then we would come back on probably in this area, for example. That would be a great buy add area to see a bounce on the higher side. So this is the large view about the gold. The other thing I wanted to point out is here, same thing. We have a nice big divergence with DXY and gold. So it's very interesting because we have the same setup as we have on the other instrument. And this is the fib chart. So you see how precisely we went to the 1685 level yesterday. Unfortunately, the momentum we had was cut by the mayor's speech. So we came back here, posted a double bottom, and now we are getting with more momentum. We are long from there in the morning. Of course, I called for this long, I think here, because I was sleeping at this time. So I called the long here, and we are looking for a potential break of this level. Then we would stop on this volume support, and after that we would have a kind, this is really a big a long time frame chart with very little support resistances in it. Then we would have an open road to this area, or probably even to the 1880, the 1880 level here, if we see the DXY starting to really feel some tailwind on the downside, as we could have despite the hikes. So same thing here, every hike will push it down, we will buy it back and go up, and then will be a new hike, we will push it down, etc., etc. The only thing that will change that will be the economical situation that will worsen slowly sorry, I'm banking some pips here. Okay, that will worsen, and when this situation will start to point out really hardly, even the hikes will not help DXY to go higher. So I have, of course, several charts on this thing. The other interesting thing, you can look, even if I don't use it at all, just as a confluence, but you see that the fib, for example, here has been working much better than the pivots, because we did never touch the weekly pivot, but we did touch some fib and some level we have in the other chart, especially this one with the monthly open and this 88.60 fib. So if we don't come back again to this 88.60 fib, we will see a continuation. And as I just said, we need to break this 1684, 1685 area to see the continuation on the upside. So for me, EURUSD as well as gold is a clear buy all the dips. Wish you a very nice day and a nice week. I will come back with a new update as soon as I can.